Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, February 28th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. Let's take a look at the big picture, work our way into the day itself. This a 7-8 month channel structure we've been trading inside of since the July high. We tested the top of this channel about 6 or 8 weeks ago. That was a late December testing, Christmas week as I recall. It is now at 251.76, meaningful longer term resistance. When we were testing it in late December, we'd mentioned how at that time you should allow for full bearish rotation back to the channel base that is presently at 168.82. We tested that base about a month ago and came off of it nicely. And following the testing of that base, we've been mentioning how the 251.76 channel top should be considered in reach over the next 3 to 5 months. We don't have a clear buy signal to indicate that, but that would present itself if we were to close this week, Friday, above the 207.83 descending 1/3 speed line, and that should, yes, be by a 1% margin given the 8 months that this line study is. So it really is a Friday settlement of 209.90 or higher that sets up another, this could be within 3 to 5 weeks, could take the better part of 2 or 3 months, where we would then clearly anticipate the 251.76 to 253.49 combination channel top descending 2/3 speed line. FYI, with respect to speed line analysis, when you close above the descending 1/3 speed line, the descending 2/3 speed line becomes your overall objective. And it's not really considered an objective yet, that 251.76 to 253.49 region, but it is clear enough of a possibility, having tested channel support for 3-4 weeks ago in the 168.82 area, that you can prepare for it. As we were mentioning a month ago when we were testing this channel bottom, if you were to reach for 250 strike, let's say, out of the money calls that don't expire for at least 6 months, maybe the better part of a year, that would be a viable play. And, if you hadn't done that and we closed Friday at 209.90 or higher, you can still do that. And then the expiration, I think, should go out at least 3 months, maybe 6 months on that. I see that as a possible 2 to 3 month play to the upside. But until then, we came very close to testing that 207.83 speed line on Tuesday. We didn't rally to within 1% of it, but it was very close. And so I can't call it a test or even an essential test, but we came close to testing it. On the daily chart, it comes in at 206.79. We do not include that as a minor point. I suppose we could, but really I want to keep all eyes on the weekly version at 207.83. That is our pivot point as we move into the second quarter. A buy signal above it. Until then, we can top out at 207.83 near to midterm. Over the next 3 to 5 weeks, fall back to channel support at 168.82. That is the real possibility here. And so as we take a look at the speed line on the daily chart, you can see the point I'm making. Having tested or come close to testing the 207.83 version on the weekly chart, 206.79 on the daily, we are, I'm going to say that we're now susceptible to falling back to 169.58 over the next 3 to 5 weeks. Yes, we did not test the 206.79 speed line on Tuesday, but we came pretty close. And in fact, we probably rallied to within 1% of it on the daily chart. In any event, 169.58 wouldn't surprise me by the end of March over the next 3 to 5 days, holding below 207.83, 206.79 on the daily chart. Let's take a look at the downside now as we work our way down from 206.79 on the daily chart. We do have 191.56. That, if tested, can contain session weakness and quite possibly through the rest of the week. I think you can consider 191.56 also kind of a 3 to 5 day swing trade. So, perhaps selling 207.83, 206.79, anticipating 191.56 and vice versa. You could buy 191.56 in anticipation, perhaps, of rallying back into the 207.83 region within 3 to 5 days. But having come so close to testing this 206.79 speed line, 207.83 once again on the weekly chart, I think once, as I was saying before, you can allow for 3 to 5 weeks bearish rotation back to 169.55. There's no clear sell signal at play, sell signal on weakness. That actually would ultimately come with a settlement below 181.49, which is a simple channel structure that, if tested over the next week or two, can contain weekly selling pressure. So there's a few time frames here to dissect. 3 to 5 days is 191.56 to 206.79. 1 to 2 weeks is 181.49 to 206.79, or in other words, 207.83, on the weekly chart. Sorry to do that. Let me find that chart again. There it is. And 3 to 5 weeks, as I say, having come so close to testing speedline resistance on Tuesday, this market is now susceptible to full bearish rotation back into the upper 160. So it is a bit stair-step, but it depends on your time frame. Some of you love to trade 3 to 5 day swing trades. Others of you like to hold positions for several weeks. I know there's a lot of day traders who are out by the closing bell each and every day. But really, and obviously all of these levels you see here are well suited for that, day trading. But the 3 to 5 day swing trade, 191.56 back to 206.79. The 1 to 2 week swing trade is, selling 206.79, buying back at 181.49, going long at 181.49, rounding back up into the low 200 handle, again within a couple of weeks of doing so. And the 3 to 5 weeks, I think, is still 169.58 from 206.79. That allows the market to bottom out at 181.49 on the way down for a full week, presumably then bouncing back to 191.56, possibly falling off, closing below, and down we go to 169.58. As we move into March trade, this 181.49 formation will be more equidistant between 206.79 and 169.58. Right now, it's a little closer to the 169.58, but you can see over the next week or two, it really is sort of smack dab in the middle, and I think offers a nice near-term pivot point between the more significant 206.79, that is 207.83 on the weekly chart, and 169.58, that long-term support level. If over the next week or two, the market closes below 181.49, you've got a clear sign for 169.58, where once again we can bottom out. 168.82, by the way, on the weekly chart. We can bottom out not only through March, but even through the second quarter, and from here round back up again to the speed line we've been talking about at 207.83, and perhaps up to 251.76 within 2 to 3 or 3 to 5 months. I think that kind of covers the big picture. Let me go back to the day itself. I do have 196.77 on the way down. We closed in the 199 handle, can contain intraday selling pressures at 196.77, and above which we can test the 207.83, 206.79 level on the daily chart on an intraday basis, where we can top out once again through March trade. If we break 196.77, 191.56 is in reach today, where we can place a daily low quite possibly through the rest of the week, and if settled below 191.56, does set up for 181.49 by Friday's close, where we could bottom out through next week, and from there round back up to the 206.79 to 207.83 area within a week or two. Upside today If now it really is a Friday settlement, but we do have 206.79 all day long. But on the weekly chart, it really is a 207.83. And if we close Friday at 209.90 or higher, that is a 1% violation of 207.83. We have a rally that should play out through March trade into April. 3 to 5 weeks, 2 to 3 months is anybody's guess. We've seen the kind of volatility before for 3 to 5 weeks, but those have been downside sell-offs. Well, we've got upside retracements too. I think it'll be the better part of 2 months before reaching into the low 250s, where, for instance, if you bought the upper in the 170s here about a month ago, that would be a nice play to hold out for the low 250s. I think that's pretty much all that needs to be said. Please click like, share, subscribe. Check out wickedstocks.com. We put out a stock pick on Google on Tuesday. You may have a look at that. We show a solid support this market is approaching here in the coming days or the next week or two. You want to know about it because above which Google remains bullish into later year. I'll let you check us out. We offer a 5-day free trial, and you can see the Google stock pick, also the stock pick we're putting out on Wednesday, all for free. So check us out at wickedstocks.com. We'll be back tomorrow with Thursday's Tesla. You have a great day.